right, so today I'm gonna give you two stocks that actually shocked me in Q1. I was like, and I gotta keep it real. One of them I talked crap about. One I was like, yo, this stock is a dinosaur, which both of them really are, but I gotta give it to them. They must have heard me talk crap about them this year and they went crazy. So today, we're gonna talk about two stocks that shocked me this year in Q1 so far. Definitely got a long way to go, but they jumped out the gate real strong, which is always a good sign when the company jump out the gate strong like this. So before we get into this video, man, let's make sure you like, make sure you subscribe, hit that bell and let us know. But also, man, leave a comment in the bottom. Let us know how you like these videos. Let us know what would you like for us to talk about so we can help you on your journey when it comes to being a better investor and dominate the stock market. Let's go. Number one on my list, I gotta keep it real, is General Motors. So listen, this is definitely a company that has been in the toilet bowl for the last few years, but the stock is actually doing pretty good this year. Let me give you an update right quick. I should have had this rolled down, but I didn't. So the stock actually shocked me. So it's up 27% year to date. Now listen, you can go look at a GM scale. GM ain't been up 27% in a year in a long time, let alone being up 27% in a month. But the company did have earnings, and its earnings came out and it said that its profits, the CEO said that her goal is to sell more EVs this year, which we can say that coming into the year, they sold 19,429 units in 2023. That was up 20% year over year, meaning that time last year, so that was good. They actually outsold all their competitors in 2023. They sold 2.6 million vehicles, and that was up 14% in the year, so that was good. The CEO said the goal is to increase the profitability in the EVs, increase cash flow, and increase margins. Now, what I will say is this: when a CEO makes a strong statement like that, remember, the stock market is a forward-looking mechanism. So it looks forward. It's asking, what are you going to do forward? This is why a lot of companies fall when they don't give strong guidance. But the other thing happened for General Motors, because profits and sales were up from Q4 in 2023, and then they beat expectations for what they were supposed to do in the full year, and then they gave strong guidance for 2024. The CEO said that they did slow in profits, but they say coming into the second half, they plan to kill that moving forward. They say we're gonna definitely see some large improvements on what they're gonna do. Now, also, when it comes to fuel, they got a fuel-friendly vote. When it comes to gas, being more gas-friendly with the gas providers and the combustible engines. So I'm not gonna lie, with a soft fuel economy law, I'm not gonna lie, man, I was surprised to see GM really do that. So is it a buy for me? Nope. I still don't believe in the company. I feel like there's a lot of other brands that are doing exceptionally well with better balance sheets, with better income statements, with better cash flow. But I'm not a hater. I gotta definitely clap it up for GM and what they doing. Now, lastly, I talked crap about this one. I was like, yo, get this stock out of your portfolio, Disney, because Netflix has just been giving it a grade A butt whipping. The theme parks they've been all right. They've been losing a lot of money on streaming, but I got to give it to them. This year, first quarter, Disney is up 35%. Woo! That's outperforming Apple and Microsoft. You feel me? They up 35%. The stock just got upgraded by Barclays to 135%. Disney said they could actually break even on streaming by the end of 2024. Now that's big, because they was losing $1 billion just in their streaming services. Of course, Bob Iger came back in and he's cut the debt in the company by large. So the company debt went from $52 billion to $42 billion. Now that I'm not gonna lie, you gotta give a man credit. He done cut $10 billion off the debt in a short period of time. Come on, Bob. All right, Disney also reinstated the dividend, but they also reinstated at a higher dividend. So the dividend is up by 40%. They're now paying a 0.45 cent dividend semi-annually, meaning twice a year, meaning in the middle of the year, which is going to be in July, they're going to pay another one toward the end of the year. Before COVID, it was 30 cents. They cut it from between COVID and now, so that reinstatement is good. That dividend will be due July the 5th. Now, let's just talk about some of the things that they did, though. Not only did he do that, but Bob Iger did a lot of cutting. He did a lot of cutting. He cut a lot of services. He also had a consolidation with Hulu, the company they made that right. They're also trying to put ESPN as a separate entity to do his own thing. So Bob is definitely cutting a lot. He cut a lot of jobs. He cut a lot of parts of the business that wasn't making money. He also felt like the other CEO did some things wrong. The big dogs love Bob Iger. I don't like what he said when he said that the people need to just start writing again while he's sitting in front. He just bought a $73 million yacht. But it is what it is. They actually said that on a call that they actually have a possibility to have better margins than Netflix by at least 25-30%. Now, this when a company just be talking, right? But for some reason, the people believe it. And so Bob talking good. He done already cut the debt down by $10 billion. He's saying that before he leaves, now he has to leave in 2026. That's when he said he's stepping down, so they're going to have to put another CEO in place, right? So that's only 2 years away. So we definitely want to see how that's going to turn out with them. Also, they're in a proxy battle, which is they got another it's called activist investors coming in saying, yo, this is a staple brand of the American economy. They feel like it's being run bad. Nelson Peltz, he's trying to get on the board of directors at Disney. That's a fight that Disney is in, so that's kind of overclouding. And in case you don't know what that is, that's people that can sit back and say, nope, this company can be run better. So what they do is they file a paper, they send a letter out, it gets across all the news channels, they come in, they want to get a vote on the board, or they on the board, they want to get a seat on the board, they kind of want to demand that the company do some different things. And even if the person don't get on the board, it highlights a lot of things that's going wrong with the company, and then it forces the company to do some things right. You know what I'm saying? So either way, it works. Right? Shout out to my guy, Mark Benioff from Salesforce. They had so many people Mark fought all of them off. He fought all of them off. And rarely can you do that. If you think about what a proxy battle is, go watch Billions and you'll see when Bobby Axelrod, they had the little Twinkie thing. And he got on the board and he made him change a whole bunch of stuff. That's a proxy battle. When somebody on the outside, a billionaire says, yo, this company can be ran better. They can come in and they can do all kind of stuff. So, again, man, I'm just shocked. I'm not gonna lie. Disney is definitely a shocker to me. I'm still not a believer in a brand like that, but you cannot deny what you see. Again, with Bob Iger coming in, he's going to be in for a year and a half, 2 years, and another CEO got to come in. And just like with the other guy, they went through 3 or 4 years of bad just management, and that's what management can do to a brand. So again, still not a buyer of GM, not a buyer of Disney at this time, but they are 2 big surprises for me going into the year. Another one is General Electric. They just been going crazy since that new CEO came in. CEO came in and just cut so much debt off the brand, separated the business. General Electric held General Electric Aerospace, General Electric Electricity, created these large moats around the business. Also had General Electric Renewable Energy, which is not doing so good, but the company is up like 30-something% year to date right now. So those 3 companies are definitely crazy. And that CEO, Larry Culp, shedded $100 billion in debt off that company. So, man, that's what great management does in the business, and that's what we like to see. We like to see businesses cutting that debt down. But that's it, man. That's my big 3 surprises for Q1. Let's see what Q2 got to offer for us going into the year, man. I also understand that this is an election year. So I'm interested in seeing, you're going to see see people like Joe Biden, do a lot of things to affect the market because every president wants the stock market to be good under their reign. And so you're going to see some things happen. That's why you see healthcare, him coming out with healthcare. You see him saying they're going to cut student debt. It's to get him reelected in the office. So I'm also anxious to see how that Q3 is going to go because the election is in November. So watching that Q3, Q4 is going to be real interesting, especially when we know that September is typically the worst month in the market. So I'm really excited to see that. Again, the market is up right now 9%. And so that's the market hasn't did that well since 2019 in the Q1. So, man, shout out to everybody that's making money during the market. If you haven't made money in the market yet, man, don't trip. Just keep on listening to us. Hopefully, my goal is to help you become better at investing, playing the stock market, and printing money, man. It's your boy, the Wall Street Trapper. Make sure you comment below. Tell us how you like this video. Tell us what can we do to help you on your journey. Give us some ideas to help because this channel is built on helping you all be better. We do read the comments, and we do use that to try to help us make better videos for you all as we grow this channel. Make sure you like and subscribe to it. But lastly, make sure you tap into our show each and every Tuesday. It's called Trapping Tuesdays on the Wall Street Looks Like Us Now Network. Also, make sure you like all of the podcasts, all of the audios that's on all streaming platforms. So, it's your boy, the Wall Street Trapper. I love y'all. Salute.